What is going on with the price of gold and silver? They are on a tear. Today was a very, very good day, as was yesterday. Let's talk about why that's the case. Two major, very interesting events, news stories occurred this week. We're going to dive into those in this video, plus a lot more. Let's get started right now. So today we got the second quarter GDP numbers, and the economy contracted at a 0.9% rate. That's right, 2 consecutive quarters of contraction. That means recession. Unless you're Janet Yellen, because I just read that Janet Yellen said we're not going to call it a recession, we're going to call it a transition, whatever that means. Well, Janet, the rest of the market likes to call it what it is, a recession. Now, if you couple that with the high inflation numbers, 9%, right? You see this theme? There's a lot of nines. We had 0.9% contraction and we have 9% inflation. What do you get when you have a contracting economy, a recession with inflation? You have stagflation. And I'm telling you guys, you're going to start hearing more and more people, mainstream media, talking about stagflation. And if there's one environment that's ideal, it's like the Napa Valley for gold and silver prices, it's stagflation, right? If you're going to grow grapes, you go to Napa Valley. If you want to grow the price of gold and silver, you get into a stagflationary environment, and that's what we have going on right now. Hey, and the price of gold really liked this news. Today, it rose to $1,755 per ounce. Silver also reacted very positively, up almost a full dollar today, flirting with $20 per ounce. The mining stocks are starting to come back. The GDXJ closed today at $33 per share. And let me tell you, we got a lot of runway in front of us with the junior mining stocks and the senior mining stocks. The GDXJ at 33 now, the 52-week high, 52. So just to get back to as high as it's been in the last year, you're talking, I don't know, what is that, 60% gains? We'll see what happens. It'll be interesting to watch both the metals and the stocks in the coming weeks and months as the market realizes we're in a stagflationary environment. Hey, I've got one more major news story I want to cover with you, but before I do that, I wanted to say thank you for joining me in Ron's basement. You're always welcome here. I'm not in the basement right now, but no matter where I am and no matter where you are, you're always welcome to join me, and I appreciate you giving me some of your precious time. You can subscribe, turn on notifications, hit the like button, share this video wherever you like. Now, the final news story I want to cover with you, repeat after me. The Federal Reserve is in a big, big pickle. Okay, they did raise rates this week. 0.75 of a point as expected. The market is perceiving a bit of a dovish shift. They talked about challenges with the economy. The Fed is in big, big trouble because of this. They still have high inflation, right? Which means they still, in theory, if they really were going to fight inflation, should be raising rates. However, the economy is slowing down precipitously. And if they continue to raise rates, that will result in the economy going from what we're in now, a recession, to a deep recession and possibly a depression. Right now, the rates are at about 2.5%. That's the neutral zone, according to the top economist. If they raise rates even further, that puts contraction forces on the economy, which is already contracting. So easily we could slip into a major recession or a depression, which they don't want. Look, no matter how you slice or dice it, with all this financial engineering that's gone on over the last 10 to 20 years, there's really one end result, and that is the US dollar is going to continue to lose its real value. So you want to be in real assets. Maybe land, gold, silver, whatever the case may be. That's what a lot of you guys are into, I know, because that's what this channel's all about. Primarily gold and silver, mining stocks, but anyone who's smart enough to realize that getting their money out of US dollars and into real assets is a wise move for the long term. And I made a prediction several months back that eventually Joe Biden would throw Jerome Powell under the bus before the midterm elections and have his person, Lyle Brainerd, come in to save the day, quote unquote, at the Federal Reserve. We're already seeing hints of that. Several tweets that came out from Democratic leaders. I think Joe Biden even had something to say like, oh, now we're seeing what happens because Jerome Powell's raising rates. Like one day they're telling him, you need to fix inflation, you need to fix inflation. And when he does raise rates and it slows the economy, then they decide that it's his fault that we're having a recession. This is not going to end well for the U.S. economy. And we'll end with something funny. We have nothing to worry about, guys. We're in good hands because look at this tweet from Joe Biden earlier today. He's already saved the U.S. economy one time from a horrible recession, and he's confident he can do it again. One thing for sure, we're going to find out, and I'll be here with you through it all. Thank you for joining me. Until next time, you be well.